down 49% in 2022. Is Intel stock a buy for 2023? I'm going to answer that question in this video, so stay tuned. The first thing I'm going to look at is Intel's quarterly revenue growth going back roughly 10 years here. And you're going to notice two things here. One is the difficulties in the recent quarters. Revenue declined by 20% year over year for Intel. That's a stark change from a company that, if you look before the onset of the pandemic, they were delivering very steady revenue growth over the years. But the recent, of course, they divested from their uh, commodity uh, chip business, and that caused one reason for a revenue decline year over year. But the other was the significant pullback in consumer spending on electronics as they built up their inventories already. If you already made your home office, you already bought a laptop, you're probably not going to buy another one for several years. So that's hurting Intel in the near term. So I wanted to demonstrate both of those facts, the troubles in the near term, but also the very healthy growth over the longer term. So two things going on with Intel in terms of top line revenue. The next thing I wanted to show is cash flow from operations, which again shows a similar trend, right? Steady, healthy growth over the years, and then the troubles most recently in declining cash flow from operations, stemming from the same factors I mentioned earlier with revenue growth. Interestingly, one of the things that is attracting investors to Intel stock is the very healthy dividend yield, 5.58%. Most recently, this is looking at trailing 12-month dividends. And that's better than a 30-year government bond. That's around 3.5–4%. So you can get a very good dividend yield if you're investing in Intel stock. And over the years, Intel has increased its dividend, so investors can reasonably expect Intel to continue increasing its dividend per share going forward. Another thing I wanted to look at is Intel's earnings per share going back the same time. And again, similar trend. You see very nice growth over the years up until recently when the pullback in consumer spending on electronic hit Intel's profitability, causing it to fall, going down to 25 cents per share from over $1.60 per share on a quarterly basis. But after this near-term troubles, and you can expect these near-term troubles to persist over the next several quarters. Don't expect Intel's prospects to improve in the next quarter or in the next 2 quarters, right? The consumer spending on electronics is going to be pressured as they shift their spending to away from home experiences like travel, like restaurants, like bars, like concerts and theaters and theme parks. Things like that are going to experience greater share of consumer spending than they normally would as consumers unleash this pent up demand that will last for at least another quarter or two. So these near term pressures will persist for Intel stock. Finally, let's look at valuation to determine if Intel stock is a good buy for 2023. Looking at price to free cash flow of 15.58, it's a relatively reasonable price to pay for Intel, both in terms of comparing it to its own historical price to free cash flow and compared to the S&P 500 stocks. Of 15.58 is an average or fair value to pay. And then looking at the forward PE of 13.38, that's cheaper than S&P 500 average PE, and it's down considerably from the over 24 it was trading at its peak PE. And remember, this prices in the headwinds in earnings per share going forward for the next year. So you're already taking that into account, paying this PE for 13.38. So all things considered, I would say Intel stock is an excellent stock to buy for 2023 and beyond. The near-term headwinds will persist. However, longer term, the company should do fine, should consistently deliver steady top-line growth and earnings growth going forward. This is not going to 10 times your money in the next year or two, but longer term, if you buy Intel stock in the first or second quarter in 2023, and you hold the stock for the next 5 to 10 years, it's likely going to give you an increase in your wealth in that time. All right, so that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.